What is up, guys? CJ here, and we're back with the second episode of the Foundation Challenge. A challenge where we are taking 20 trades at $10 risk to set the foundation of our edge. Let me quickly see if we can. Crazy trade here in MNT. Where did we put it? Here for anyone who didn't see episode 1. But basically, if you're a TCT trader, I'm going to go through and just kind of show what the execution can look like and what our edge can look like from someone who is not Lars, who hasn't been trading for as long, but has studied the content probably as hard as anyone, and is currently reading Trading in the Zone by Mark Douglas. So as I read that book, I'm going to be trying to establish some of the things that he talks about in that book down to a winning mindset, probabilities mindset, accepting your risk fully. That's a huge reason why the risk is set to $10, because it's very easy to accept the risk. And it kind of sets the foundation for our trading, and is strictly about execution. A couple other things: having an unshakable belief in uncertainty. When we're trading these markets, every model, this model here on Hype, it's a probability. We see our edge, we execute on it, and we're gonna break this trade down, but you see our edge, we execute on it. Something I was really thinking about during this trade was something that Mark Douglas calls the now moment opportunity flow. Basically what I like to think of as the present moment. When you're so in the moment, you are able to essentially tap into the collective consciousness who is trading this market, and it's maybe a little esoteric, but I really resonate with it, kind of in the same way that a school of fish or a flock of birds all turn together. There is a way to tap into the consciousness of trading. So that's something we are going to keep kind of figuring out for ourselves. We're relatively on the start of the trading journey, but with no further ado, we're going to jump into trade number 2 on Hype. We can see how it played out here, but we're going to get rid of the TA and we are going to break it down. Backing up here on Hype, let's gather some context for this trade. Here we have our Hype chart. Now, this chart can be looked at like it is bullish until it's not. So what that means is this chart has been showing a lot of strength, and we have been trending up here, making all-time high after all-time high. We're just in price discovery. So we had this range form here that we were looking for shorts like this. It was a little bit more extended here, but you had a TCT Model 1 that failed, didn't hit technical target, and you had a compression in here, which made this valid to look for as a tap 1. In this case, it ended up not being, and it was cleaner to look at this range right here. But again, same thing on this range, we end up just going higher. Again, like I said, this coin has been very bullish. So shorting it is counter context. So we know that going into the trade, but on this pop out, we are looking for a PO3. And so in that PO3, and we still are, this can all still be viewed as manipulation. Damn, that was a clean high right there. It's okay. It's a little unorthodox, but pretty clean high. So now that we are in the manipulation phase, if we want to back up here, just to be thorough, so kind of looking for this to be our manipulation phase right here. And this is what the PO3 would be looking like. Now, I had a scenario where we were going to get this model play out, but we have this structure demand right here, and so we were going to bounce off that and then potentially put in another high like we did. Oh, not too clean, but then sell off. Something like this, where then your range starting point here becomes your tap one of the bigger range, and then because it's such super tiny with that manipulation zone, if the manipulation zone was just like this, you know, it just wouldn't look relative to the size of this accumulation. So I was looking for, and we'll talk about that for the TPs and how we were playing it, but I was looking for something like this to develop where we're going to trade this, take profits, maybe it breaks down, and then look for a bigger short here with a higher time frame range. But we didn't get that necessarily, and instead we are just seeing a lot of strength out of hype here. So coming into the trade, you're trending up, pull your range, high to low. You can see we have this beautiful range right here. Now, there was one thing that I overlooked in this range, and that was this demand right here. It was kind of sneakier structure demand right there. Maybe it's because it was the back way. I'm not too sure, but entering replay mode here, this is where it kind of all goes down. And you know, we got a lot of factors here. We got the volume profile giving us confluence, that volume inefficiency, you know, breaking, some breaks. Yeah, nothing too crazy there. We had a nice return to zone as well, minus this demand that I didn't place enough importance on when I was in this trade, and you can obviously see how it was definitely a factor. But to get into the technicals here of the entry, which is most important, what we can see is that when we were coming up here, you know, we were coming up a little fast, but we were leaving some great liquidity. But I was looking for something more, you know, to see a topping structure or whatnot, and that's exactly what we got here with this Model 2. Get that break structure right there, back to bearish, and that's where you can enter, right there. So up above this high. And so this is what we were running right there for a beautiful 10 RR. But something interesting happened here on the pullback. So I was actually up for this, and we had this extreme supply right here. And price, we pulled back into that extreme supply, making this kind of similar to an EHP model, if you guys are familiar with that model. It's a TCT model where your Model 2, which has a tight tap that's valid, leaves a POI that a more extended tap comes into, so it's more of a higher time frame, 1, 2, 3. And then we got that breaker structure back to bearish right here. So I ended up adding on this. It was a little sus because you had a bit of demand right here, but it was backed by the volume area high. But my recent back test, I was seeing demand like this get disrespected, so it really wasn't that crazy to move the stop loss, and it really didn't change the trade that much. Average entry moved down slightly, ever so slightly, like that. So this was our trade that we were running. So around, it's almost a 12 actually. 11.8 RR. Stop loss now above this high as there's no reasons to go higher. And now we can play out price and see what it did. So we got a lot of liquidity here. That was basically what we were targeting to get this trade rolling. I'll slow it down. No rush. You can see on this pullback, on this pullback, we just created more sell side liquidity and just took that. Beautiful. Again, seeing that demand get disrespected because it's has no purpose there. Now, this is where I'm sleeping, and I wake up right here. I believe I hopped on the chart. 7:30, New York Open right here is when I was logging on. So the way to play this, because we're already in a high RR trade here, but is to de-risk. Take a partial right here to de-risk at this liquidity right before that demand. What would we say? Maybe like, I don't even know, 10% TP would have been fine. But honestly, 20% TP there. Whatever, just, you know, let's just say de-risking TP because you'd have to figure it out. Or if you just want to take profits, because as soon as I saw this PA when I woke up, my stop loss went to break even. So, because we only had liquidity there. There was some super small supply or something up there. Like, we're not messing around with that. If we're gonna reverse all the way back up here, I don't want to be in the trade. So I wake up in the morning, we have a risk-free trade. So around this time, saying my image is too large. Let me see if I can grab it from the Foundation Challenge in our Discord. Just gonna pull this up. Perfect. All right. So this was kind of the analysis. That we had in the moment when we woke up around here. Emotions were journaled as well before going to bed about kind of taking the trade, the entry process, little doubt in my mind, you know, just kind of meditating almost on the thoughts that I was having while entering these trades. But stop loss to break even, risk-free trade, trailing our stop loss, you know, kind of everything we discussed here, but just want to show that, and then we'll keep playing out price here. So we had de-risking, take profit right here is what we should have done. And also, yes, we were running a 67% take profit right here. Because I'm anticipating that this may just be to create the bigger range. And we're running a higher RR play, and it's the second trade. We want to lock in some profits. So put TP1 on the chart here, just like this. And now we're gonna let this trade play out. And we're gonna see what happens here. See, so we end up making our way back up. And there we get stopped at break even, and there is why our stop loss was at break even. So great trade management, get stopped out right there at break even. And that'll conclude our trade number 2 on Hype. So we're gonna check in with the journal So we're gonna follow this journal all the way through the 20 trade challenge. You know, we can put all the way to 20. I'm not gonna do it right now, but we had trade number 1 on ETH, and then we had trade number 2 on HYPE. That ETH trade taken in New York PM. I believe, yeah, New York PM for the first one, and Asia was the entry for the HYPE model. So kind of going through it, you know, we had a lot of good things. Somehow I had an $11 risk in there instead of 10. Same shit. $0 profit. We're not doing durations. It's pre-planned, everything pre-planned. Stuck to the plan. This is a very important column right here, STTP. Stuck to the plan. So in every trade, our goal, win or lose, is to have yeses in this column every single time. You know, I gave it a 3-star rating. I also, looks like I gave ETH a 3-star rating. This is mainly due to how we executed, how we pre-planned. You know, it's not always about the result. This is a probabilities game after all. But if we journal every trade, you know, we're going through the process. I see no reason why this HYPE trade was not a 3-star trade. Obviously, if it hits technical target, we can maybe give it a 4 or a 5. But, and then now we'll keep checking in, read some takeaways, but we'll keep checking in with our insights, and we'll watch our equity curve throughout the challenge. So we're at the very start. I don't want to make this video too long, so we're gonna end that here, and that is our trade number 2 in the Foundation Challenge on Hyperliquid. See you in the next one.